founder or an entrepreneur. You wanna take your company value to 300 million, we gon' show you how to do it. But we got the roadmap, the aspirations. We'll give you a game plan and strategies. Seize control of your company's destiny today by tuning in to Private Capital Mastery. Let's start the show.
Welcome back to another episode of Private Capital Mastery, the podcast dedicated to equipping entrepreneurs with the knowledge and strategies to master the art of private capital. I'm your host, Brian Franco, and today we are with a leading private equity professional who holds essential wisdom to financial success. I'm here with Dan Lee of Comvest Partners, leader and co-head of consumer and retail for Comvest's direct lending strategy. Dan serves as a member of Comvest's Executive Committee and the Investment Committee for Comvest's Direct Lending Strategy. Dan, thank you for being here and thank you for spending the time with us on Private Capital Mastery.
Thanks, Brian. It's fun to be here.
Yes. So tell us, you know what you do on a daily basis. And in fact, I had a professor once tell me, what good is it if you know what you do if no one else knows what you do? So let's tell the world. I mean, what do you do at Comvest? And understanding you're focused on consumer and retail, but I imagine as a firm and as a group, you expand outside of that. But maybe give a little background on that.
Yeah, absolutely, Brian. I appreciate that. So we're a private equity firm. So We're looking for companies that are looking to grow in a smarter, healthier, faster way. And so we've got a couple different strategies. We've got our private equity side where we're investing in a control stake. So that's typically where a company would come to us and realize that they're looking for more strategic guidance, more resources that we can bring to the table. We have that history and that bench of operating partners. But in many cases, you have a business that doesn't want to sell control. They're looking for less dilutive capital, and that's where I'm on the lending side of our business. That's where we become the primary go-to solution. And what makes us a little bit unique is that we have that private equity arm. So I have access to those resources. So in a way, we can bring the best of both worlds in the sense that we're less dilutive, but we do have resources that can be strategic in thinking through what's available to the business, what other areas of growth, what might they not have considered in terms of future markets. My private equity side likes to say that they're looking for good businesses that aren't yet good companies. And so they've got customers, they've got products, they've got demand, they've proven out, and they might have been at it for 30, 40, 50 years.
Yes.
Maybe it's a family-run business, family-owned business. But they just know they don't have what they need to build out the C-suite.
Correct.
It's just not in their DNA. That's where we can come to the table and help try to put together more of an org chart that's going to help the business scale.
And this is what we call smart capital, as we talk about it time and time again, because capital comes, as you know, and as you described, in two forms, either debt or equity, right? And so you have the ability and the option to provide both, but the common denominator, whether that's debt or equity, it's smart capital because, to your point and to your firm's experience, you have a bench of talented individuals that could come in and meet the business wherever it is on that journey, right? And so if you need to pull a CFO off the bench and parachute them into the business, I imagine you guys can. If you need someone to do BD or to round out the platform so that it could be scaled through add-on acquisitions, right? Your team is doing that. And
That's right.
So we find that a lot of our clients live in this narrative you provided, right? They've been in business for 20 plus years, some 30 years, and the mindset that the entrepreneur has to have advanced the business to that level and to that stage is needed, but there's a different sort of mindset and strategy that needs to be implemented to take that company to 100 million and beyond. And so maybe you could share some experiences and that you have with past clients that fit that kind of description and illustration.
Yeah, absolutely. And I think that's a really good way to put it. It's hard enough establishing a business, building a business, finding customers, finding a product. Starting to think strategically is just a different challenge. Yeah. And that's where we found that we can be helpful. Frankly, we're looking at metrics that may not matter to the owner of the business because they don't matter in the day-to-day. They don't matter month to month or quarter to quarter, but it matters in the multi-year forecast that we're looking for. So in terms of ways that we've worked with companies, I'll give you an example. We have a veterinarian clinic that came to us, and it was a business that was successful. They were looking to grow and acquire, and they had a nice platform. It was on the small side, so it was a couple million of EBITDA. And they went to banks, and the banks told them they didn't have the type of information that they were looking for. And so they offered them a very, very conservative facility. It wasn't going to help them scale. They knew they didn't want to sell control of the business because they believed in the value of their equity and in the growth potential. And so what we offered them was a bit of a hybrid. We can give them capital to help them grow, but frankly, where they had challenges, some of our competitors, many of our competitors only deal with private equity sponsor-backed companies. And so they're used to having the information presented to them in a very easy format of what they expect. Because we work with both owner-operated, family-owned, and private equity-owned businesses, we're used to doing that hand-holding. And so working with the CFO to say, we don't need a completely built-out data room. We don't need a sophisticated set of financial analysis to start. We're going to get there, but we can help you build it. We'll tell you why these things matter to us. And so in this situation, you had a CFO that was looking to learn, just hadn't needed to think that far ahead, because that's not where they were in building the business. And what he found in working with us was that we were very difficult in the beginning. We asked a lot of questions, and we told him that. We said, look, we are going to really push you in terms of the way you view the business historically. But once we build this reporting engine together, it will scale. And so we started out with weekly reporting. Typically, we get monthly reporting from businesses. We went to a weekly reporting session with this business. We said, this is the cadence that we think we're going to need to reflect where you are and how we can anticipate your needs, your growth needs, because what they were looking for was a partner to fund more capital as they grew. To do that, we needed to make sure that the rails were there to protect our investment.
I was going to say training wheels, right? The weekly meetings weren't because you need to be in that much control, but these were training wheels until you could take them off and let them continue on the journey.
Exactly right, because it's not just the CFO, it's his business development team, it's his back office, it's helping everyone understand why do these things matter to us. And so what we found was those first few calls were relatively long, and we had to go into helping them understand this is why we are concerned about these metrics and these dynamics. And over the course of a few months, they started anticipating what we'd need. And those calls became much shorter. And suddenly we were growing faster than either one of us expected, both the pace of acquisition and the pace of our funding. And that's the best business we can ask for, is to have a borrower that you remove those training wheels, and now that business is ready to be sold to a private equity firm. And so I think there are situations where we can come in and provide that transitional capital that really helps the business think about its options for the future in a different way.
And what a great experience for that CFO to have that education, to have that experience working with your team, because otherwise, perhaps he could have ended up at the same destination in terms of what he knows, but you helped him collapse time. You helped that business collapse time with your team's knowledge and experience on what measurements should be made, even if they're not making them historically, as you described. Let's get the data room started. Let's see what you have. Perhaps you could triangulate the data to get to the intended measurements that you want to track and locate for a reason, right? Because your role and your job and your fiduciary is to your investors and to your groups, and you have to make sure that the capital that you're deploying is being deployed carefully into companies that have the ability to repay that money, yes, but it ultimately has a profound effect on the business, because you also described how these businesses are growing at massive rates. And this is the theme of what the Private Capital Mastery podcast is about, is how do you collapse time to scale your business? How do you collapse time to achieve that ultimate exit strategy, right, through a massive liquidity event or an exit? And so it's amazing to hear this, because it just solidifies and validates what we talk about, and you're real life living proof of those in the market that are providing this level of capital and type of capital to achieve that exact goal?
Well, and we're lucky because it's a fun journey to take.
Yes.
The reality is, Brian, as you know, one of the most important elements of partnering with the capital provider in any way is understanding the communication, the level of communication, the transparency, the honesty. Because I'm telling you a success story, and it's a great one. It's for us and for them. But for every one of those, there's 30 businesses where they came to us, and the story's great and it's exciting, but they're just not ready for what we can do, and vice versa. And so you need someone that can be honest with you about where you are in that journey.
Yes.
And also, we may not know immediately that they're not ready for this type of capital, or that it's they need a little bit more time with setting up the board, or whatever the dynamics may need to be put in place. You want to make sure that you're dealing with someone that understands what their organization needs, so they can be honest with you. And it's really easy to run down rabbit holes, and that can be incredibly costly.
It can. You can spend a lifetime, doing that. And so you talked about, being ready, and readiness is another theme in which we talk about. And readiness comes in different forms, right, depending on the business. But so you gave an example of you need a board. You haven't constructed a board. What are some of the other pitfalls you see in companies? Because of course you see more companies than you invest in, but those companies you don't invest in today, perhaps you do, years down the road. What are some of those common pitfalls that you find of not being ready?
Yeah, I think it's really, so the reporting is the big one. Just
Financial
understanding,
reporting,
how they look at the business from a financial reporting standpoint. What are the state of the books and records? That's the biggest challenge typically. A larger business will have built that function out over years and years and years, and they've got a large back office. When you're a relatively small and growing business, that's not your primary priority.
It's not a priority.
And so I'd say that's the biggest challenge that we run into typically, is we see businesses that just aren't quite ready from a reporting standpoint. So to your point, we say these are the things we need you to do to sort of put this reporting in place, build out this element of the way you look at your business. Once you have these metrics, this dashboard, then we can revisit that in a month or a couple quarters or a few years. It just depends on where the business is. But I would say that's a big one. Personnel, certainly. Understanding many businesses have a bookkeeper in that CFO seat, and that's someone that is perfectly capable and has gotten the business to where it is, frankly. And you need that role. Some of those people can transition into a more strategic CFO role, and some can't. And so that's the challenge for the CEO, the business owner, is to understand. Obviously, easiest if I can just push that person to grow into that role. But there's some point at which you need to realize when you're pushing on a string, and we need to supplement. And sometimes it needs to be a change. Often it's just an additional resource, and that means cost, which is never easy. But at least it's not a change in personnel. Sometimes it is a change in personnel. It's just a function of, this is someone that was great for this stage of the business, and now it's time to look for someone that has been there, done that. When it comes to the next stage.
And really, I like to illustrate that as someone that, because a bookkeeper tells you where you've been, a good CFO will tell you where you're going, right? And so those measurements, we always hear this phrase, what you can't measure, you cannot improve. But specific to you and the work that you do, what you cannot measure, you cannot underwrite. and so you give these prospective clients the playbook of, okay, go back, do these things, implement these systems in your business and these SOPs, and then come back to us. And like you said, sometimes it's months or quarters or years later.
And that's one of the ways that we've absolutely, and one of the ways we've set up our business is to be relatively lean. There's 4 of us that built our business over the years, and what we've tried to do is make sure that each of us is involved at every stage of the decision-making process. What we find with some of our competitors, and it's a matter of how you scale. Our business wants to scale as well, and often that's by having a separate sales arm apart from a credit arm, apart from a risk. And so sometimes it's tough to know as an organization that's growing, if you're talking to the sales arm, you may not know that, and then you get a different answer from risk, right? And so one of the things that we think is important is that upfront communication, that upfront transparency. So I mentioned earlier that we ask a lot of questions, and we do that as a way of smoking out a relationship. If you view our questions as being an impediment to your growth, then that's just not the type of partnership we're looking for.
Correct.
And that might be the right answer, by the way. You might just have a better source of capital for where you want to go than we provide. But what we're looking for is transparent partnership, communication, and that's where we can be helpful in pivoting with the business as it reaches challenges that come from opportunity and challenges that come from challenge. Right?
In your culture, in your firm, as you're looking to align that same concept of thinking and outlook with who you're investing in. And sometimes cultural alignment is a mismatch, but to your point, and that's okay, right? Because there are opportunities that do align, and that's the best for both parties, quite honestly. And you find that is those that are coachable and they listen, they will go back to the drawing table, they will do that work, and they'll come back when they're ready. And that's always fun to see. It's rewarding to see, right?
Absolutely, yeah. And listen, it's always more fun to get a deal done than not to. But sometimes getting to the no quickly is the best answer for both sides. And we're long-term oriented, so we're always looking for, if this isn't for us right now, who do we know that can help them? Whether it's a banker, accountant, consultant, another capital provider that provides a different type of capital that can help bridge them back to us as a partner. So how do we build the long-term relationship? Obviously, we wish everything was as easy as starting day one. Let's get the loan funded and go grow this together and build. That'd be great. That doesn't happen. It's a lot more. There's a lot more give and take in the way to getting a deal done, and sometimes it does take years. But that's how you know that there's a relationship. That's once you've built that communication over a long period of time, that's when you know that it's a more reliable. There's more integrity in the communication, which is great for both parties to know. They've seen how you reacted to bad news and vice versa.
Yeah, and you're building a roadmap, and that roadmap at times you align. You're at the same waypoint, and sometimes you're not, and so. To reroute them, and you're always there saying, look, here's where we sit, here's where we stand. When you get to this waypoint, let's connect again. What does that look like for you guys? What type of check sizes are you looking to ideally write? Are you industry agnostic, or do you have specialization in terms of industry? Maybe share some of that.
Yeah, typically we're writing check sizes are 25 to 200 million per deal. That can be in the form of equity from that private equity control strategy, or senior debt, which can scale to a much larger degree, or junior capital, which can be more flexible. So a lot of different ways that we can get there in meeting the need, and it's really a matter of figuring out what. Does the group know what they're looking for in terms of where are they in that conversation / exploration? Do they have a banker? Is the banker well-versed in the type of capital they're looking to raise? So for instance, it could be a banker who's extremely well-versed in M&A, but not as much in capital raising. And so that's a different conversation than a banker who focuses on capital raising. And so that's where for us, it's figuring out what's the best capital we can provide in that situation to meet the need, to make them successful, because to state the obvious, the best outcome for us is a successful borrower that we can continue to fuel their growth and to continue to participate in their growth with more capital as we grow. One of the things that makes us a little bit unique, Brian, is that our organization is by its roots entrepreneurial. Our founder started us 35 years ago as a banker. And so looking for ways to solve complex capital needs, broken growth stories in the public markets, and situations that just had fallen out of the institutional frameworks for capital raising. And so that's where we started, was as a banker trying to find that capital from other people, providing a piece of it ourselves, and then raising the rest from other people that we could helped bring along in that journey. Ultimately, as he grew the firm, he realized it'd be much easier if I had capital. And if I could just, I now know what I'm looking for from a 20-year track record of having done it, and now I can raise the capital from institutional investors. And so that's what we've spent the last 20 years doing, is really building out that, taking it from more of a merchant bank problem solving to a more traditional institutional framework, but keeping that complex problem solving mentality. So we don't want to be competing with 30 or 40 peers for every deal. There are plenty of people that do that, and and they do it well, frankly, some of them. For us, we're looking for situations that require a little bit more of a bespoke solution, and sometimes there's a private equity sponsor involved, sometimes there isn't. And but one of the things that we bring to the table, because we do work with private equity sponsors and we are part of a private equity sponsor, we understand what they want to see for the business that has decided we don't want to sell yet. Sell control yet. We may want to sell a piece of our business, but we believe that equity has significantly more value, and we believe with the right capital and some strategic guidance along the way, we could make our way there ourselves and sell for a bigger valuation down the road.
And that's the winning strategy, right? And we spend a lot of time with our clients up front, helping them understand what their own expectations are, because the last thing we want to do is take a client to market that's looking to access capital and they don't know exactly what they want, right? And you know this by experience, is that if we were to bring you somebody like that, you're going to say, hey, we love it, go do these things and then come back. We spend a lot of time focusing on preparing those businesses so that when we do come to market, we are very clear on our expectations. We're very clear on where we are and where we want to be. We're very clear on how that capital, when injected, is going to help develop and grow the business, and at what pace, right? Now, there's always nuances and there's always unforeseeables. To kind of your point, there's times where businesses grow faster than any of us ever put on paper or in a spreadsheet. And there's times where that growth is slower than anticipated, and everything in between, right? But ultimately leading to some sort of growth to a critical mass, bigger and greater than where they were when you met them. And the beauty of that is as much as they're protecting their capital table, they're still able to access, debt. But if equity is needed somewhere along that journey, you guys are also there, which I love, because not everyone is approaching the market in this way. And I see exactly why you're not interested in competing with 30 peers on a particular opportunity, because the smart capital that you bring to the equation and to the entrepreneur is powerful, and it allows them to achieve their intended goal, right? But
it's interesting you say that. It's funny because I'm just thinking about some interactions with owner operators where they'll sort of put us, you're just like the other guys. You're just and the way that we show them we're not like the other guys is by not necessarily being their best friend immediately, but when we send that long list of questions, they say, "Oh, wait, you're not like the other guys. You're more difficult." we're not more difficult. We're looking for more transparency, right? And so, yes, we're going to ask more questions, and we're going to have more elements of our deal that require an earlier conversation than some of the other capital you're talking to. And it's one of the interesting things that we find is business owners are human beings.
Yes.
They're programmed to not want to have a difficult conversation unless they need to. We all are. Yeah. But what we spend a lot of time trying to communicate is having that conversation earlier allows us to prepare if things should get more challenging, or there might be opportunities that arise that we realize you pulled that capital need forward in a good way. If we don't have the kind of communication, open dialogue that discusses why something didn't go the way we expected, it's going to take us longer to pivot to help address that. So we also have worked with some business owners who have spent a long time building their business and think they've seen their friends at the country club in many cases get the exit and just take a sigh of relief, and they see that moment of joy. They see that moment of well-earned happiness. But we have also seen that they've seen what's on the other side of that, which
Yeah.
is sometimes they realize I wasn't done.
Yeah.
I wasn't sure what to do next, and I felt like that had taken everything out of me, right?
Yeah.
But with the right partner, suddenly you find new energy, you find new focus, and it can be, it's fun when you see someone that's thinking about selling control or borrowing some capital. And many times they decide, I'm going to go the control route because that's the right partner. And they'll roll some equity and continue that ride. But when you have someone that decides, I want to continue to build this on my own, and
Correct.
we love to find those groups because we find there tends to be a second wind. You know, not expected, but it can be there.
Yeah, because what we've seen in our practice is that there's entrepreneurs on this journey, and early on in their development of their business, they bootstrap themselves, right? And they bootstrap themselves because they didn't have the wealth then that they do now. But as that wealth accumulates and grows, at times we find that entrepreneurs see their business as a risk, right? Because now they have this nest egg to protect, right? Now they're worried about how do you build firewalls around this wealth that they generated, right? And so bringing on a capital partner also insulates them in ways that they were just not insulated before. And because the risk is now, we always say it's like, we fill in the name of the entrepreneur, but it's like the Bank of Brian, right? This business has been funded by the Bank of Brian, but now that we're partnering with, let's say, Comvest, now we're working with the Bank of Comvest, so to speak, right? And that gives that there's a sensation. It's hard to capture and articulate, but there's a sensation that an entrepreneur has. It's a combination of relief, that the weight of the world is off their shoulders in some ways, where before it's all on their shoulders, and every move and every shift that they make, and sometimes it's on their own. They don't have a board. They don't have the clarity that you're providing through the process, which appears to be difficult questions, but you're really, at that moment in time, you're conditioning them to prepare for a difficult time. They just don't know it.
Well, it's and to be able to identify them, because one of the things that makes you a successful entrepreneur is having gotten through all those challenges before by to some degree putting your head down and just saying, I've got this, and in many cases you're building it by saying, if I could just get here, right? And then suddenly you're there. Well, if I could just a little more. Or maybe you have a partner who is at a different point in their life and in their estate planning. And maybe their view of the business. Maybe they think the business is all it can be, and we'd be crazy not to sell to a private equity firm at a 15 times valuation. That's more than we ever could have imagined. But that might not make you fulfilled if you know the business can be more. And it doesn't mean selling it for more will make you happier. It means continuing that journey, right? Just continuing the entrepreneurial journey of building it, waking up every morning, feeling the sense of wanting to grow, of energy that comes from dealing with the challenges of growth. So in a lot of situations, but the estate planning is an important part of it, right? So that's another piece that we will provide, is to come in and say, why don't you take some chips off the table, right? So it doesn't just need to be growth capital. Most of it will be growth capital because that's the best alignment of interest.
For the business.
Exactly. But, at the end of the day, take some chips off the table, right? That's good for your mental health. That's good for your family, and it will allow you to really start to focus on the next stage of the business. Or let's buy out that partner who doesn't have the same vision of the future, and thank God for them, because the business wouldn't be here without them.
Absolutely not.
And a clean exit where they are getting the realization that they never would have dreamed of, and you are getting the business free and clear to continue to grow the way that you believe in, and are willing to live with the consequences, but it's now yours. That's a pretty exciting place to be in the building of a business.
A common theme in which we see is when there are partnerships, they're never, seldom are they the same exact age with the same exact horizon, right? And so the opportunity for, let's say, a younger partner, of 2 or 3 or 4, however many, they still have a half a tank of gas, maybe a full tank of gas in them, right?
Yep.
And so they want to go, and they're not, they do want a liquidity event eventually, but not necessarily at that moment, where partners that are older in age, they've been there, done that, and they're ready to take chips off the table. And this is what you're describing and what you're offering, and
Yes.
that's powerful.
And that's a dynamic we see all the time.
Yeah.
And in some cases, some of those situations get pushed into a private equity sale because I think the partner that's running it it becomes a decision of if you don't know what other options are there, you're going to fall to the momentum of a decision, and selling for a really big price.
Yes.
Sounds like an awfully good outcome when you've been building a business and watching it grow and watching it scale.
Yeah.
And that is a great outcome.
It is.
So, there's nothing wrong with that, but might not know there's another alternative, right? And so I think that's really what we want to get word out is, look, there are other ways to continue to grow the business. And the good news is we won't waste your time. As I said, we're good with quick no's, and we know kind of how to get to the information we need to realize this isn't a fit for us right now.
Yeah.
But here's how we can be helpful until you are.
Yeah, and we talk about this a lot. In our practice, as much as we are the conduit to capital, we're the conduit to clarity, in helping our clients understand, what are their expectations, what are their needs and desires, right? And sometimes, and a lot of times, different partners have different expectations, but the common denominator here is that we are managing expectations, right? Because if you can't identify those, even if they hit that waypoint or that marker, right, along their journey, they might not even realize it, right? That, because there's always let's go one step further. But that's important to us because we don't want to go through an exercise of futility with the client and going to market to just find out that they weren't ready, right? We spent a lot of time up front. And that's a lot of the reason that stimulated me and motivated me to start this podcast is to provoke this thought in founders and entrepreneurs and to help them understand what access to the private capital markets looks like, because a lot of folks don't know. I mean, how many clients or prospects have you met that weren't even aware that you existed?
Well, and so it's interesting. There can be a tension with bankers at times because a banker, for an M&A banker, their best event is a sale of the business.
Yes.
So they might not want to introduce other alternatives, and that's
right.
just, it's not what they do.
That's right.
And so I think that's something organizationally we try to be very mindful of. Of the different players in the universe and the roles that they're each playing. But it is it's very common that we will see a business that's looking for a sale process, for it to sell in a private equity process, that doesn't know that there is another option. They know that they could borrow money from a bank,
Correct.
but that's not going to get them the capital they need to grow. So they know they could borrow some junior capital that might be really expensive, but there's this hybrid solution that we provide, which is relatively unique.
It is
for people that, and frankly, goes back to they may not realize they've hit a point where they've scaled. They spent so long building the business when it was beneath the scale that it would hit the radar of an institutional investor, that once they get there, they don't even know it, right? It's sort of we're just going to get it to here and then we'll sell to private equity. Yeah. And again, that's a good outcome. There's nothing wrong with that outcome. And hopefully there's some, if they want to roll something, there's some meaningful role in that for them. But at the same time, if there's another option, why not explore it? Why not know that this may be, and obviously it has its own risks.
It does.
Right? If the business doesn't perform after you do a deal, then you're going to wish you had done that private equity exit, right? So it's not there's no free lunch here, Brian, as you know.
That's right.
But just understanding your alternatives, that if you're lucky as an entrepreneur, you're going to get to face this decision once. Yeah. Maybe twice if you're really good and life is long enough, right? But
that's right.
Like once or twice, this is not something that you're going to face very often. No. And if you don't have an advisor who knows that these options are available to you, just because they don't have that that knowledge themselves, then you're not going to go and you might make a decision that doesn't get you the best outcome you could have had.
That's right. That's right. That's exactly right. And so, I love the success story that you shared early on in the conversation, because it really illustrates the power of smart capital, as I describe it, and how that can collapse time for an entrepreneur and really preserve. We haven't used this word, but it's really preserving the legacy that those founders and entrepreneurs have built. And your group is very mindful of that and continuing that and adding upon that. And that's, for me, I will be there one day in my life, right, where I'm going to pass on my legacy. And as I get older in life, I become more conscious and aware of how important legacy actually is, right? And so I think that's very unique about your group. I love your approach, and the nuggets of information that you provided today. Really, the theme is readiness and preparedness, from financials to the team to a CFO. And we could go on and on with the listing of what you need to have in hand in terms of being prepared. But this is great information, for those tuning in and listening in. But Dan, thank you for spending the time here with us and talking through this conversation. I'd love to have you back in the future and continue
Anytime.
the dialogue. All right.
No, listen, I enjoyed it. I love talking about this stuff, and I loved hearing earlier before the podcast. We got a chance to talk about what you've built and your journey, and I think I mean it when I say that part of what excites me about us is that our founder built us.
Yeah.
And so we are an institution today. We are an institutional investor, but our roots were from our founder believing that he could bring something to the market that didn't exist. And I'm here because he was successful, and and to see you 20 years into your journey is really super cool, and I'd come back anytime. So really enjoyed it.
I appreciate that, Dan. I really appreciate it. And
My
so,
pleasure.
and those of you that are tuning in and listening in, if there's any sort of information that we could provide you, including contact information to Dan, we will provide links for you. But I want to thank you for joining this episode of Private Capital Mastery. I hope we provoked thought in you. I hope we've encouraged you, and we hope to see you next week. Thank you for joining us. I'm Brian Franco.